Welcome into another episode of This Week in the Market. I'm your host, Omar. I thank y'all for tuning in to another fantastic episode. Today, we're going to recap the week of December 18th to the end of the year, December 29th. Let's get started, man. There's a lot of news, a lot of things going on in the market. We'll talk about things that happened. Later, I'll talk about some notable moves in 2023, some stocks that stood out to me, some stocks that had good gains. We'll discuss some ways to save money later on in the show, some tips on how to save money, and lastly, we'll discuss some trading tips, some trading lessons that I've learned and that I've experienced throughout the year. First, we'll recap the yearly gains for the QQQ, VOO, and the DIA, all related to the indexes that they represent, the NASDAQ, the S&P 500, and the Dow Jones. As you can see, each of them was up 55%, 26 and 16% on the year. So if you held these throughout the year, everything was magnificent and everything was good. Speaking of magnificent, let's talk about the Magnificent Seven. As you can see here, Amazon had a great year, up 80% on the year. Tesla, another fantastic year for them, up over 100% to close at 248. Meta, Facebook, closed at 194%, up 300, closed at 353, up 194% year to date. So for 2023, they had a good run. I remember when they was at like $150, and as you can see, they just skyrocketed. Microsoft had a great year, up 58% on the year. Nvidia, AI just kind of boosted them to the next level, up 239% on the year. Apple had a good year. Let's go back for a second. Apple had a good year, up 49%, and Google as well, up 58% on the year. So if you held these throughout the year, if you had these in your portfolio, you had a good run, you had a good growth. I remember when Amazon was at $80 last year in 2022. Just imagine like when that growth, I was in there and I sold it a little prematurely. So we'll talk about that a little later on. Google, I remember when they was trading around $85 as well. So buying and holding, man, it's the key. Next, we'll talk about some notable movers on the year. Some, like I said, some stocks that stood out to me, and we'll get right to the next one here. Eli Lilly and Company, the healthcare pharmaceutical company, had a fantastic year, up 60% year to date. Now, this does take account for dividends reinvested. The stock opened at 366 on the year and closed at 582. So just imagine that's more than $200 in growth in just this year alone, 2023. So fantastic year for Eli Lilly. I'm looking to buy in. Hopefully they can drop somewhere around 475. I would like to get in looking at this chart because I would want to get it under the 200. It may or may not ever even go there. As you can see on here, it just stayed above the 200 throughout the year. So a good price, maybe it'd be the 500 to 200 day. If it gets down there, maybe 520. But definitely Eli Lilly had a great year. Next up, we'll talk about Affirm, the buy now, pay later company that everybody should be familiar with if you've been living in this world over the past couple of years. Affirm really kind of had a great year during the COVID pandemic years. I think it reached up to like $200 at one point. Since then, it had a drastic pullback, and it opened 2023 at $10.02. Now, as you can see, it went up 400% year to date and closed at $49.14. Now, this was a fantastic run for Affirm Holdings. They partnered with not Apple, they partnered with Amazon, they partnered with Walmart, and they partnered with a few other companies just to make it easier for people to complete transactions and make purchases. A lot of investors been taking heed to that, and they've been, buying more. And as you can see, the stock reflects the price. It's had a great year. I would like to get into Affirm. I should have got into it when I first seen it around like $7 or so last year, 750. And I think even this year it may have touched that at some point, maybe in May. Yeah, maybe around May, I think it got down to that low point again. But if it pulls back, I definitely will get in because I can see Affirm being around for the long term. People love to buy now, pay later. It's just something that's kind of ingrained into the consumer nowadays. So I like Affirm, and shout out to Affirm for a fantastic year. Next, we'll talk about the Fair Isaac Corporation, and you may or may not have ever heard of this company. I know I haven't until recently, a few months ago. And what this company is actually it's the FICO company. It's the company that assigns you your FICO score. This is them. As you can see, this company opened at $608 at the start of the year and closed up 94% on the year with dividends reinvested to $1,164. Now this is over $500 growth just on a year. Most people probably weren't even invested in this company. They have a good balance sheet. They have good revenue. So this is definitely a solid company. I would not invest in this just because I can probably find better companies that I would prefer. However, if it did drop maybe to like 450, I would get in it because it is a great company and they are going to be around forever. So it's one of those things that it's a staple in society that people don't even know it exists. Next up, we'll talk about Yum Brands. Now, this company did not have a great year. As you can see, they was only up 3.93% on the year, but I put it in here because I wanted to discuss it for its lack of growth, to say. So this company opened Yum Brands. They own, if you don't know, if you're not familiar with them, they own KFC, they own Taco Bell, and they kind of got some restaurants under their umbrella there. They opened 2022 at $138. They closed 2022 at $130. They opened 2023 at $127 and they closed this year at $130.66. So this company has been going backwards for the past couple of years. And when I first looked at them, I thought it would be a good company, given the fact that KFCs are pretty relevant and prevalent in society. You can probably find them in every neighborhood, and Taco Bell's the same. But they have a horrible balance sheet, have a lot of debt, and the stock's been downtrending for the better part of 2 years. Even though this year it was a quote unquote positive year. So would I invest in them? No, not necessarily. They have, like I said, not unless they clean up their balance sheet, clean up that debt. They have, I believe, like 12 billion in debt, 10 billion in debt, something like that when I last checked. So this is just kind of an example of a company that you shouldn't invest in. I'll just say that. To close out the year, Apple falls due to its patent with Apple Watches. They stopped selling the watch, and then after about a week, they started selling the watch again. So basically, they're having a lawsuit with a company named Masimo. I believe that's how you pronounce it. The company Masimo, Apple worked with a few years ago to discuss the technology that Masimo had on the blood oxygen technology that it can sense it. And what Apple tried to do back then, they attempted to purchase the company outright. Masimo declined the offer and decided to stay independent from Apple, and talks about them working together just kind of faltered at that point. A couple years later, Apple hires a few staff from the Masimo company to develop the same technology that Apple then used in the watch, in its recent watch. So once Apple launched its watch with that technology, then the company Masimo decided to sue them for patent infringement. So with that, they had to stop selling the watches due to the lawsuit. Eventually, they was able to start selling them again. However, it is an ongoing issue that should be monitored closely because if Apple can't sell these watches, it does account for 5% of Apple's revenue, which may or may not seem like a lot. However, it is a premier product of Apple. I have an Apple Watch. I know many other people have Apple Watches. Some people may find it useful, some people may not. However, it does have good technologies. It can detect irregular heartbeats, it can detect your blood oxygen, etc. So this is something that should be monitored closely. So hopefully, Apple has enough money uh, to sustain themselves in court, to pay any fees. They have a good free cash flow. So I don't think this will really be a major issue unless Apple loses this case. and has to, for some reason, stop selling their watches altogether. So we'll monitor it in 2024 and kind of just see what comes of this, if anything. Maybe they'll probably settle and just kind of agree on some type of terms. Moving on to Chuck E. Cheese, the restaurant that we all knew to grow and love when we were kids. They're looking to sell their company. If you don't remember, a couple years ago during like the pandemic, they had to file bankruptcy, and now a few years removed from COVID-19 pandemic, they kind of got things back grooving, but now I guess the owners are just saying it's probably best to just kind of move on and cut our losses, if any. So Chuck E. Cheese restaurant chain emerged from bankruptcy 3 years ago and is exploring a sale amid acquisition interest. According to people familiar, it's a Texas-based company known for the arcade games and is working with investment banker Goldman Sachs on an auction process. And there's some people are saying that even Dave and Buster's could be interested in purchasing the company. I think it's been recently valued around $1 billion. I think Dave and Buster's probably has the money. I haven't looked at their financials recently, but Dave and Buster's is, as you can see, the ticker is Play, is a publicly traded company, while Chuck E. Cheese is not. So it is something to see, just to see what comes of this, if anything, if Chuck E. Cheese will be shut down altogether across the country and be turned into Dave and Buster's if they purchase them, or if someone else comes along and purchases Chuck E. Cheese, the name, the rights, and keeps it and maybe puts a new twist on it and kind of updates it with the times. Chuck E. Cheese is a good place for kids and the kids have fun, things, that sort of thing. However, I do think that they lack innovation, maybe newer technologies to make it to a place where adults can then go and maybe take their kids and have something to do as well. That's why Dave and Buster's would make kind of more sense. However, I'm not really sure if people are even into the whole Chuck E. Cheese experience anymore. Next up, we'll talk about underwater car loans signal U.S. consumers slammed by high rates. Now, if you're not familiar with the term underwater, it basically means you have negative equity on your car. So, hence, if you purchase a car today for, let's say, 35,000, the minute you drive it off the lot, it's worth about 22,000, 23,000. That's considered negative equity. And interest rates have been high. They haven't been cut yet, even though the Fed signaled that they would in 2024. And people are paying a lot of money for a brand new car nowadays. I looked it up. I think a new car average payment is around $750 or so, give or take 30 or 40 bucks. And a used car average car payment is around 550 bucks. So people are paying a premium price just to get a new car, and once they take it off the lot, they're losing all its value in the vehicle. And this is at a highest level in more than 3 years. So it's definitely showing that the economy and the high interest rates are affecting big purchases, smaller purchases, all purchases, and people who are purchasing cars in recent times are really feeling it the most. Because once you buy the car, you can't sell it for what it's worth. I think I've heard on Market Mondays that Teslas are down more than, I believe, 50% or so of their value if you purchased it a few years ago. Remember when Teslas was like $80,000, $90,000 cars? Now they had to cut their prices so much that people, if you bought them in 2016, 2015, when they were valued at that, now today I think they're probably a $50,000 car. Now you lost $40,000 just on your car, $50,000 on your car, and you can't do nothing with it. So it's just something to be aware of, something to keep in mind when if you're thinking about buying a new car in 2024, or if you're looking to sell your car. If you sell it, then you go buy something else, and it's going to just depreciate in value over time anyway, because that's what cars do. It's not an asset that gains more value over time unless it's like an antique car or a Ferrari or one of those preeminent cars that maintain their value. Cars, for the most part, do not. Trading tips and trading lessons. Now, this part is going to be a great part of the show. I think these tips will be useful to you. I think these will be helpful, especially to new investors and new traders. These are some things that I wish I would have learned a few years ago, just because it has value that you can't really measure unless you're really in it. And let's just get to them. All right, trading tips, trading lessons that I've learned in 2023. These are my four. First one is use stop loss or take profit. Now, this can be applicable if you're day trading or if you're swing trading or if you're buying and holding long term as well. Typically, if you're buying and holding long term, you probably shouldn't even never take profit. You should just, ride it out. However, there will be points where you should take profit, and it's important to know what the market is showing you and the economy and a lot of factors. So, use stop loss. This is a tip when if you open a position and you're swing trading something, if you buy it at $100 and you're saying, okay, if it drops to $90, then I'm not willing to lose more than that percentage on the trade or on the option. So you would use this stop loss to protect yourself from losing more money than you're willing to lose. Now, there's been times where I forgot to put stop losses on because I just think that, at times I knew it all and I was like, oh, I won't go down too far. And then something bleeds down 50%. And you're like, freak, man, I should have really put that stop loss on. So stop loss is very important to save you from losing too much money. And on the opposite side, the flip side of that is you got to take profit when you're up. Now, if you're up over 200% on a trade or you're up 200% on an option, it's important to take the profit because once it turns around, it may take another 2 weeks, 3 weeks to go back up. And if you're trading options and you have an expiration date for, a Friday and it peaks on a Tuesday and you don't take the profit there and it goes down and it doesn't go back up to that point for another 3 weeks because that's just how the momentum takes it, then you just missed out on the opportunity to even make any money, and you may have to sell that option or that contract or close that position with a minimal gain versus when it peaked and taking a profit there. The next tip I have is to have target prices in a plan. This kind of coincides with the first tip. Before you enter any trade, before you buy any option or contracts, or you got to have a plan in place. You got to be like, okay, I'm going to enter at this specific price. I'm going to take some profit at this once it hit this price point, and I'll close some more positions at another price point. So if you buy it at 100, you want to take profit at 115. You want to take some profit at 130, maybe. Have a plan in place and follow the plan. Don't deviate the plan unless factors cause you to change the plan. I like one of the things that Wall Street Trapper says is until the story changes, just stay the course. Things stocks go up, stocks go down. But if there's no story behind it that's going to change this the meaning of everything, then just go with the flow, go with where the momentum takes you. That is tip number 4, which is you can't guess direction. But before I go to that, I'll just talk about time and why that's important. Now, time is, as you can see, if you go back to my previous slides, where we all saw the Magnificent Seven, all went up mostly 50% on the year. That's a time-based growth rate there. If you open at the beginning of the year and held it to the end of the year, even though it went up, it went down, went up, went down, it all closed up at least 50%, Apple 49%, but they all went up almost 50% on the year, and that's what time would do for you. So when you open these positions, swing trades or options, give yourself enough time for the stock or the position to really go up. Don't just make it a short trade. Don't just buy it on the Monday and sell it on a Thursday and get a $4 gain. Because if you're not having enough shares or positions open, you're not going to see that much growth. Now, if you open it if you have enough capital that you can buy 10 contracts, 20 contracts, or 200 shares, 100 shares, then you'll see a little bit of growth that makes it worthwhile. However, if you're just starting out, you kind of want to start off and just give a contract or a trade enough time to really develop and get the growth so you can turn those $3, $4, $5 gains into 20, $30 gains, $50 gains, $100 gains for the year, $100 gains in 6 months. It's possible because we've seen in 2023 a lot of stocks was able to do that. And the last tip is you can't guess direction, you just got to follow it. Now, if you're looking at a chart and you see that it's just been going down, 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 then maybe it's an opportunity to execute a put, open a put position, and ride it down. But when you see it turn back and it goes back up for a considerable amount of days, like if it's under the 20-day and it's trading back up to the 20-day, that's an opportunity. You just got to go with it instead of trying to guess it and just open a trade willy nilly without even doing your own research or homework on where the stock is, where it can go, what kind of news is out there that could make it go up or down. So you got to pay attention to a lot of things. Don't just guess it, just go with the flow and make the money, man, because it's a lot of money to be made.
Next up, we'll talk about some tips on saving money. These are some things that I think will be helpful to you as a person who has money and makes money. And these are just some things that I use personally and some things that I've came across recently in the past couple years. First tip on saving money is buying a water filter. Some people like me used to always go out to the grocery store, purchase cases of water, two or three at a time, and then, consume the water that way. However, one of the things that I've learned is that if you just buy a water filter, a good quality one, you can get it off Amazon, Walmart, or Target, wherever you like to shop at. And you can have the same quality water at home that you can get without having to go to the store and spend money, $15, $20 at a time on cases of water. I think this was beneficial to me. I think it would be beneficial to you. Also will save the environment. It goes away with the waste of recycling the water bottles or just throwing the water bottles in the trash. So this is a tip that I like. You're getting the same quality water if you filter it yourself versus getting a bottle that's been sitting in a bottle, getting water that's been sitting in a bottle for probably a year, and then you came along and purchased it. So that's tip number one. Tip number two, prepare your own meals. If you can prepare 2 or 3 meals a day yourself, you're likely to save anywhere between $10 and $25 every day. If you're someone who eats out every day, you like to buy your breakfast, buy your lunch, buy your dinner, you're probably spending between, like I said, 10, 20, 30. And if you're buying 3 meals a day, you're probably spending $50 a day. Now, if you go out to the grocery store, Walmart, Target, Whole Foods, wherever you like to shop at, you could buy some meat, some ground beef, some salmon, some seafood of your choices, chicken, buy a bag of rice for 10, $20, buy some sauce, some frozen vegetables or fresh vegetables. You can have a meal that you can then meal plan throughout the week with just 20, $30 versus obviously going out, buying a meal at your favorite restaurant and spending 10, $20. And if you have kids, then you're probably spending more money just so everyone can eat. Dollar menus don't exist anymore. 4 for 4s aren't the same anymore. Biggie boxes and all these $5 meals, they're not the same anymore. They're just diminishing the quality of the food. You're still not even getting your money's worth for what you're spending. Now, if you can make your breakfast or skip breakfast, if you can, oh, my light just went out. If you can better off making your lunch or dinner, you're better off, and you could definitely save more money that way without having to go out and spend your money in these restaurants. Third tip on saving money is create a budget. List out all your bills, write them down in your notes in your phone, somewhere where you can see it and you can track it. Write down your income, how much you think you're going to make on the month. I like to do it in months just because it's kind of, you get a better idea than if you try to do it on a year or you try to do it daily, just do it on a month, do it on average. You know your fixed bills, your rent, if you have a car payment, your car payments, your phone bill's probably the same, those sort of things. Write it all out, count for miscellaneous things that may pop up. So just have like a miscellaneous fund, whether it's like 20, $50, somewhere between there. You can account for everything, write it all out, do it for about 3 months just to kind of get a good average, just to see if, 1 month you may spend, I don't know, $3,000 on bills. The next month you may spend 2,500. The next month you may spend 4,000. Then you can kind of try to average that out and see where you're spending more, where you're spending less, and account for it. You got to account for everything though. So even the things that you know you're going to do, you got to do it. If you like to buy miscellaneous things, or every week, then you got to account for that. If you know you're going to buy a bottle of wine every 3 days or every Friday, account for it and just create a budget, stick to it. That way you can kind of know where every dollar goes. My fourth tip is to pay your debts. Now, this kind of is just something that probably should be the first thing you do. It should be tip number one, probably, but these aren't in any particular order. You won't be able to make any money to keep if you owe money and you got to send it out to somewhere else. So if you have like old collections on your credit, if you borrowed money from, if you took out like a loan or you borrowed money from a friend or a cousin, make sure you pay back these debts, because until you're debt free, you're always going to have money going out instead of staying with you when it comes in. And my last tip, I think they're all important, but this is one of the tips that really saved me, not saved me, but just kind of definitely helped me, when I did this. So I remember there was a time where I had, you know, Netflix account, I had HBO account, I had my music streaming account, I had all these recurring monthly expenses that I didn't really need, and it probably was like $120 worth of bills that I was just spending for no reason. When realistically, you can probably watch brand new movies online. You could watch sporting shows online. I remember how like NFL app and things like that. They're unnecessary. You don't need all these expenses. All it's doing is just taking money out of you. And if you're not aware of it, you'll have the consumer mindset where you're just always, "Ah, I gotta buy this, I gotta buy that, I gotta spend money on this." It's it's set up that way for you to think like that. So you got to be aware of where your money's going, and if you cut unnecessary expenses, you create a budget, you pay back your debt so you can keep more money, you prepare meals so that you don't have to spend $10, $20 on a meal every day, and if you buy a water filter, I promise you, you can probably save anywhere between 100 to like $300 just on this alone every month. So I hope these tips help you. I hope these tips can keep some more money in your pocket. And if they do, make sure you just, tell someone else and help someone else save some money too. Whoops. Next up, we'll talk about some goals that I have for 2024. These are my personal goals. First one is more. This is my favorite goal. Is to invest more money into the stock market and own more shares by investing more money. So it doesn't do me no good to just have 10, 20, 30 shares of a company. I need at least 1,000 shares. I need 5,000 shares. I need 10,000 shares. Now, obviously, I'm not going to get this in 1 year. However, I want to at least double, triple, quadruple what I did last year into 2024 and just do more. My next goal is to educate myself, educate the people that's around me, educate people that I love on just financials, being financially free, paying off debts, educate them on mental health. I'm a psych major, so psychology is one of the things, mental health is one of the things that I have a passion for, and I just want to be more physically active. I want to be more healthy. I want to be more knowledgeable in all the things that I can be knowledgeable in. That way, I could be a better person for myself, be a better person for others. And my last goal is quality. I want to take less trades than I did last year. Last year I did a lot of. I didn't even count how many trades I did, but I did a lot of trades, and a lot of the trades I did well on. There were some that I didn't do well on as well. That comes with just being a trader. However, this year, 2024, I want to make sure that I take less trades and take better quality trades. One of the things that stood out to me that I think I heard it on Market Mondays was to just have more positions, open more contracts. I think Ian may have said it too, Ian Dunlap. Shout out to him. So, when I was buying trades 2023, opening contracts, options, I would buy one or two options at a time. One really want to risk too much money per se, even though more times than not, I did well on the contract. So if I would have, instead of doing two contracts and did 10 contracts, I could have had so much more growth by one, believing in my trade, believing in myself, believing in the research and, you know, studying the patterns in the market that I did. And I would have made more money, by opening more contracts. So this 2024, I want to do more quality trades. I want to stay away from penny stocks. I don't want to invest in anything like that. If you're out there on Reddit trying to find a quick flip, just don't do it. Just invest in the Magnificent Seven and you're good. But if you're going to be a trader, make sure you take quality trades over quantity trades. Have a good trade, let it ride out over time, get your money and keep it pushing. So quality over quantity. Don't just do a bunch of trades making $20, $50 here, $100 here. Get those big gains. Get those $1,000, $2,000, $5,000 gains. If you can double up 10 times on a year, you can have a real good year. So these are my goals. Let me know what your goals are in the comments for 2024. If you like any of these or if you have others, drop it in there. I want to read them. I want to see what you guys got. So definitely let me know. I'm looking forward to reading it. And lastly, we're going to talk about some resources that I think will be helpful to all the new traders out there, all the new investors out there, or if you are an investor who's been in the market, then I think some of these things may help you if you've heard of them or if you haven't heard of them. First one up is Hedge Follow. This is a website that I like to go to frequently whenever I'm looking at a company and thinking about entering it and buying it for the long term or buying it to swing trade it maybe. Hedge Follow it gives you where the hedge funds are purchasing stocks at and their price points where they're entering and where they're selling at. I like to look at this because if I see, let's use Waste Management, for example, ticker WM. If I was looking at Waste Management and let's say they're trading at $150 and I'm looking at the chart and I'm like, okay, where did Pershing Square or BlackRock enter at? Where did they originally open a position at? And I would see, let's say, BlackRock opened a position at $60, and Warren Buffett opened a position at $75. And then I see Q3 2023, maybe they sold at or they purchased more at $120. Now I know, okay, I can kind of use that to formulate an entry point, a great entry point, not just a quick entry, not just a 20-day, buy it at the 20-day or buy it when it hits the 200-day. I'm trying to find the best entry point so where I can get the most value and the most growth out of it. So I like Hedge Follow a lot. It's definitely a website you should check out. You can just go in there, enter any ticker. You can see where the hedge funds and all the people with the money enter that, sold that, bought that. It's all there. Yahoo Finance, CNBC apps, you should have them on your phone if you're even going to remotely think about paying attention to the stock market. These are my favorite apps that I use. They give you up-to-date news. They give you the breaking news. You can see everything that's going on in the market with just these two apps alone. Now, if you add Bloomberg, if you add Market Watch, if you add Reuters and a few others, you can definitely kind of really get even more information. But if you had just Yahoo Finance and CNBC, you're doing yourself a solid by just having them, and turn on the notifications too. Next up is TradingView app. Now, this is the app and website where you can kind of follow your charts. If you don't know how to set up a chart, I have a video in my YouTube that's on there. I'll try to post it in the comments or in the link in the description, so you can just quickly go to that. I'll walk you through how to set up a chart, where to buy at, where to sell at, that sort of thing. So you can check that out. YouTube, YouTube could be your best friend. If you don't know how to do something, if you need to know how to do something, if you're looking for more information, just search it on YouTube, and there's more likely than not a video out there on how to do it, what it is, what the information is that you're looking for. And lastly, here are some books that I recommend that just kind of make you a better investor, make you a little more aware of how money works, and just some things that I think will be great reads for the person who's trying to be a good investor. First one is Money Master the Game. It's a great book. I recommend it. It's a little lengthy, but it's well worth it. I use the audio book personally, so you can try that out. Or if you just like to look at the pages and flip them, I like to do that too as well. This is one of the books that you should read. It'll really change your mindset on money and investing and everything related to being financially and wealthy, financially free and wealthy. Next book is What Would the Rockefellers Do? This book just kind of talks about how the Rockefeller family kept the wealth inside their family over generations. It has to do with life insurance and whole life insurance policies and that sort of thing. Great read, not too long. This is definitely something that you should check out. The Changing World Order by Ray Dalio is another great book on how economies in the world and empires rise and fall. I really like this book. It's from a great mind. And Ray Dalio is the CEO of excuse me, one of the companies. I can't remember off the top of my head, but great book. I highly recommend it. And the last book is The Compound Effect. Can't remember the author's name. However, this is a great book. It kind of talks about how the things, the behaviors, the habits that you have, they all compound into something else over time, whether positive or negative. Quick example of that is, let's just take two people, person A and person B. If you take person A, let's say he gets off work every day, drinks a beer, smokes a couple Newports, and just watches the news, versus person B who works out 5 days a week, reads a couple chapters a day, meditates, um, is is uh, is a person who gives back to the community and has a good relationship with their family and their partner and that sort of thing. So just a quick question that could come to mind is, okay, which of these people do you think will be more healthy over an 8 month period? Which of these people do you think would have more confidence in themselves over the same time period? Which of these people do you think will be likely to get a promotion at their job? That sort of thing. So everything you do or don't do will compound into something later on, whether it's positive or negative. It's a great book. I recommend it. And just some bonus books out there is As a Man Thinketh, a great book as well. And The Way of the Superior Man, another great book that I think all men should read, and all young men, definitely 16, 17 years old, definitely should read The Way of the Superior Man.
And that's it, man. Thank y'all for watching. Thank y'all for taking the time out to view this presentation. I hope that you got some useful information out of there. I hope the tips help. I hope on saving money. I hope the tips on trading helped as well. If you enjoyed anything, please like this. Please share this. Please comment your favorite parts about this. Please comment any feedback and any ways to improve. I can use it to just, better adapt to what the people like. And until next time, I hope you guys have a wonderful 2024. Make sure to drop those goals in the comments so I can read them and figure out what you guys are looking forward to doing, which stocks you're looking at, all that sort of thing. You can also comment your favorite gains for the year 2023, your trades that worked out or didn't work out. I would love to hear it all. I'll meet you guys in the comments. I'll let you guys know my favorite gains and biggest losses of the year as well. Please like, please comment, please share, and don't forget to subscribe to my channel. I'm looking forward to 2024. I'm excited, and I'm just grateful to have you guys here. Till next time, it's your boy O. I'm out.